This is the Financial News Network. I'm Christy Duffy. The economy can't stop the flow of Amazon's revenues. Amazon.com posted a 39% third quarter gain in net sales. The online retailer's EPS was 51 cents, coming in ahead of Wall Street analysts' average expectations for 48 cents per share. The company is guiding for fourth quarter revenue between $12 and $13.3 billion. Analyst consensus estimates are for $12.3 billion. Investors were disappointed, however, in the company's spending on new distribution centers. 10 new warehouses were opened in the September quarter. Fredrick Moran of the Benchmark Company joining me now. Fred, how did the September quarter compare against your own estimates?
Amazon's September quarter came in nicely above expectations on revenue, but came in exactly on line on EPS. So we maintained our full-year EPS estimate of $2.60.
The stock fell after hours as some were disappointed with the company's outlook. How did it compare against your own forecast?
Similar to the third quarter, the outlook for the fourth quarter confirmed very powerful top-line growth, but without a flow-through to profitability. The company's fourth quarter operating income guidance range of $360 million to $560 million fell below the consensus of $615 million. So management has clearly indicated that the investment spending push and the impairment to margins will continue at least through the end of this year.
Is Amazon maintaining its lead in the ebook space? Was there any negative margin impact from sales of the Kindle as prices have fallen on the models?
Well, Kindle units have continued to grow at a robust pace, and we clearly believe that Kindle remains the clear leader in Internet books. But that said, with the meaningful slump in pricing of electronic book readers, and specifically the Kindle, we assume that it is hindering margins.
Fred, do you see more aggressive pricing to compete with iPad and others?
We're definitely seeing an influx of competition against the Kindle that has pressured down pricing. Competition has heated up, and I think that pricing pressure makes it very difficult to create any meaningful margin or profitability off of the sale of the unit, and now the profitability has to come from the content loads themselves.
Is the Kindle still a growth driver? Should investors continue to focus on it, or are there other more important metrics or areas of growth?
Well, the Kindle is Amazon's number one selling product in terms of unit volumes, so it clearly represents an important contributor to Amazon's overall growth. The category of electronics and general merchandise was up 68% year over year, so clearly the Kindle is contributing towards that stellar growth rate, albeit at lower price points. So we're seeing an expansion of units sold at lower price points, and that's true not just for the Kindle but also for Amazon's product offerings in general. Product expansion and global expansion are fueling the powerful top line. So I think, Kindle definitely remains a critical growth driver behind Amazon's profitability, Amazon's revenue, but maybe not flowing through with the immediate impact on profit that to the degree it is on revenue.
Okay. Amazon trades at well over 20 times cash flow. Is that sustainable?
Historically, Amazon's traded at a range of mid-teens to mid-20s times EBITDA cash flow. It's currently trading near the highest end of that range. I think with the top-line growth that they're posting it would be sustainable if it weren't for the margin impairment that they're currently experiencing. I do think the margin impairment and the much slower growth rate of EBITDA, cash flow, and earnings that you're seeing may overhang the stock and limit it from moving up to the next valuation level. But next year, as we potentially see margins recover, if the top line can continue at a robust pace, the stock will have the opportunity to march higher.
Thanks a lot, Fred. For further updates, make sure to subscribe to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.